The IRS just dropped something that is going to snitch on your crypto way harder than any other 1099K, 1099B ever did. It's called the 1099DA, which stands for digital assets. And if you think you've been laying low key with your trades, bridges, and off-ramp moves, this form is designed to expose all of it. So if you ever touch crypto or any big platforms and you're not ready for that 1099DA, this next bull run isn't going to just pump your bag. It's going to hand the IRS a perfect report card of all your activities. So in this video, I'm going to break down the 1099DA, no BS breakdown, who's going to get one, and how to not get wrecked when these start hitting your inbox. So here's what you need to understand. The 1099DA is basically the IRS saying, all right, enough of this guessing game. If you're moving digital assets, we want the data. They're rolling out this under the new digital asset reporting rules so that brokers have to send standard information about your crypto transactions to both you and the IRS. Translation, instead of the IRS asking, did you do anything with digital assets this year, and hoping you answer honestly, they're going to hold a form in their hands saying, hey, we already know. Let's keep it simple today. A 1099 is a form you get when someone else reports to the IRS that they paid you or handled your transaction. The DA version is a new version of digital asset transactions. Think crypto, certain tokens, some NFTs. Under the new rules, brokers have to send these. And broker doesn't mean just your stockbroker anymore. We're talking about centralized exchanges. So some of the custodial wallets, certain platforms that sit in the middle of your digital asset trades, those are included. So if you thought that your trading history was hidden because it's just in an app, that app might turn into an automatic reporter with your name and numbers printed on an IRS-friendly PDF. Here's where it gets spicy. The 1099DA is meant to include who you are, so your tax ID, social security number, address, what digital assets you dealt with, and when you acquired it and disposed of it, your proceeds from the sale of the exchange, and in some cases, your cost basis, whether it was short-term or long-term. And that last part right there is huge. If basis and holding periods are on there, the IRS isn't just seeing, hey, you sold some crypto. They're seeing how long you've held it, how big was your gain or loss, and whether it should be taxed at ordinary income rates or capital gains tax rates. And remember, the platform sends one copy to you and then one to the IRS. So when you file your return, the IRS computer is literally quite matching the report against what that 1099DA says. This isn't just for whales. If you trade on big US facing exchanges, use certain custodial platforms, or off-ramp from crypto to fiat on a compliant services, you are a prime candidate to start getting that 1099DA in the coming years as these rules really start to phase in. And here's the actual curveball. Even if you think, hey, most of my activity is on chain, if your entry point or exit point is a KYC platform, that part of the story is being reported already. The IRS doesn't need to see every single DJ in play if they already see, hey, how much went in, how much came out, and that your tax return shows none of it. That alone is enough to trigger questions and for you to start receiving IRS letters. This is how the 1099DA is going to expose a ton of people. So quick scenario, an exchange such as Coinbase sends a 1099DA showing you had $150,000 in proceeds from selling a bunch of tokens. Maybe it even shows the cost basis and it looks like you netted about $60,000 of gains. The IRS system gets that data, you file your return, and a couple things could happen. Either you don't mention the crypto at all, which we want to avoid, or you report some random small gain that doesn't match what's on the form. To the IRS computer, that looks exactly like stock traders who forget their Robinhood 1099. And you know what stockbrokers do every year? They trigger letters, audits, penalties when people's numbers don't match. This is that, but for digital assets. No more, well, they'll probably can't see my trades. If the 1099DA is in your mailbox, they can see it and they already have a copy. All right, enough to fear. Here's how to not get wrecked by this 1099DA. Assume everything on regulated platforms is already reported. If you're trading, staking, cashing out through a compliant platform, plan your taxes as if the IRS can see that data, because they will. Build your own records anyway. Don't rely on just the 1099DA. Track your buys, sells, transfers, and fees use a crypto tax software that can handle the on-chain metrics and the centralized exchanges, because that data is there already. And if you don't know how to get access to that data, consider working with a tax professional who understands the space and how to do all that tracking for you. Okay. Another one, match or explain the numbers. Okay. When you get the 1090-DA, make sure your tax return either lines up with the totals or has a real explanation if something is off, like corrected cost basis, missing data, and all the other stuff. That is something a tax professional can also help with in documenting. Stop pretending on-chain is invisible. The IRS is already using blockchain analytics and expanding their digital asset enforcement. The 1099-DA just makes it easier to connect the dots from fiat to crypto. Your edge is not hiding. Your edge is being the person who makes the real money in the space and actually gets to keep it because your reporting is very tight. The 1099-DA is the IRS stepping into the crypto world with structure. You can choose to ignore it or hope, or you can use it as a real wake-up call to clean up your past years, fix your tracking now, and be ready for these forms when they start hitting your email and mailbox. Okay, if you want a short checklist on what to do when you get that 1099-DA, drop a comment saying DA checklist, and if enough of you guys have asked, that's the next free resource that I'll provide to you guys. Hit subscribe if you're serious about surviving this bull run and keeping your gains after taxes and not getting blindsided for forms that you've never even heard of. We'll see you guys in the next one.